Welcome, everyone. My name is Philippe de Backer. I'm with Arthur D. Little, based in Dubai, and I'm leading the global financial service practice. I'm delighted to welcome you all to at this live conference on the theme of payments and fintech. And I'm delighted to have a really outstanding group of panelists. And I would like to introduce them briefly. Firstly, we have Shahbaz Khan, who leads Visa in the UAE as a general manager. And Shahbaz brings over 20 years of experience in payment business and really leadership in the space. So we're delighted to have you on this panel. We have Namir Khan, who is chairman and founding board member of the MENA Fintech Association. Namir has spearheaded fintech in the region with all the stakeholders and in the broader ecosystem, and it will provide a really privileged perspective on the evolution of the sector. Kaysar Patla, who is with ADCB. Kaysar brings over 25 years of experience in retail banking with really deep expertise on cards, retail, lending, and but also Islamic banking. So we're delighted to be able to confront the views. We have Arjun Singh. Arjun is with the Al-Futtaim Group as executive vice president. Arjun leads the cards and payments for the group and digital payment service. He heads the cards and payments, but is also a member of the group's transformation office. So thank you very much, Arjun. Last but not least, Venki with Added. Venki leads and runs the business lines of cards, home finance, auto finance, personal finance, and digital work streams related to remote sales channels. Venki has a very extensive experience in consumer banking, having been a banker for over 25 years with leading institutions such as Citigroup, HSBC, and Barclays. Delighted to have you all on this live conference. We have a number of themes that we'll try to articulate, and the first one is obviously the changing behavior and consumer patterns that we've all observed in the region, not only related to COVID, but also linked to deep transformation in the industry. If I were to turn to you, Arjun, what are some of the trends which you have seen in the past 6 months, which have, of course, have been present before, but have come to the forefront, given the changes in the market and the environment? And what do you think is the major impact they could bring in financial service?
Sure. So, Philippe, thanks for actually having me on the call, and it's a pleasure to be sort of on this panel with a number of familiar faces who I tend to work quite closely with. So you know, I don't have to repeat you know what everybody's been hearing for the last 6 months, that you know COVID-19 has sort of accelerated a number of sort of consumer and business related trends. What I'll do is try and focus on I'll pick 4 of them for the purpose of this call, and hopefully they can sort of provide some backdrop on the discussion. So I think the first one, which is the most obvious one, is the acceleration of online, and I would extend it to the omni-channel commerce. I think there are reports out there which are suggesting that we've achieved sort of 3 years of growth in 3 quarters. Some have suggested 5 years of growth in 1 year. The point is that we've actually accelerated. But there are some very interesting sub-trends which have come through it. There are sort of new customer segments who have been exposed to channels of commerce which typically they have avoided in the past. So what I mean is a lot of people who were, I guess, in the older generations and uncomfortable with using e-commerce are now more actively using. The applicability of the SKUs, or the width of the SKUs now available online, has extended. I think there's a lot written about groceries, but it doesn't just stop there. We're seeing increasing amount of transaction on things like automotive, telehealth, and so on and so forth, which wasn't existing in the past. And I think one of the sub-trends as a merchant that we are seeing quite a lot of traction on, and I expect will continue to grow, is what we call buy online, pick up in store, or pick up curbside. And I think since we deal in multiple lines of businesses, we've actually seen this grow quite significantly. The second sort of trend, which is quite interesting, is that while value, and for obvious reasons, has been the sort of dominant conversation, there is a greater requirement on availability, convenience, and personalization. Now that brings a whole new challenge, not just for the retailers, but also, the banks, the fintechs, and the payment players we're working with. So in terms of the way we see it, is that your ability in the back end of your business is now actually deciding how well you do on the front end. So no more is having a glossy website sufficient enough. The third, which sort of my esteemed panelists will have a lot more to say about later, is contactless. And I mean contactless in a much wider perspective. So, what we're seeing is, tap and go using your cards. We've seen 100% growth just within our ecosystem across multiple countries. But I'm taking this the next step forward, which is, the emergence of wallets, whether it is mobile phones or bank-led wallets or merchant wallets. I think the introduction of things like scan and go within our in-store environment. And if you actually push this a little further, and I think as we resolve the issue with trust, security, and I guess education, then biometrics. So, I firmly confident that things like voice, sound, and facial will actually become a part of the future. The last one, and maybe it is a personal favorite, so there is a little bit of bias, but I do see this as a big trend, is installment financing. So we've obviously in this part of the world seen installment financing for the last decade, especially on our credit cards. We could break down the payment over 6, 12, 18 months. But they were typically for higher priced items. And it was something which I think some retailers pushed, the others did not. With the emergence of, I think, these global BNPL players and a number of the local copycats, which we are seeing in the market, and nothing wrong with copying a good idea, we have seen significant growth. And I'm talking Egypt, I'm talking Saudi, I'm talking UAE, and if I even go as far as our business in Southeast Asia, I think this is one which will stick around. And I think the banks will have an interesting angle on what role they really want to play in this market. There are a number of options. So I think I just want to set the scene. Those are the sort of four, I hate using the word mega trends, but definitely overarching themes which are going to be quite interesting going forward.
Thank you very much, Arjun. If I were to turn to you, Kedar, we've talked a lot about the emerging millennials and Generation Z associated with this trend of online. Do you observe any structural changes in the behavior pattern?
So if you look at the financial services industry, from a consumer perspective, it is one of the services that they consume, right? So if you had to look at the trends or how people are behaving, probably you first need to look at the intrinsic consumer behavior in terms of what's happening, how people are behaving differently. First and foremost, the time spent on digital devices, mobile devices, has increased significantly. People are more connected than ever. Secondly, alluding to what Arjun was saying, that the in-store experience is changing a lot. It is shifting, and it will continue to shift from offline to online. And this applies to banking as well, because there's these people who are going less and less to branches, and branches, as in the brick and mortar structure, is becoming less and less relevant. The browse offline and shop online mode is turning into browse online, shop online. Now, interestingly, in the banking world, the phenomena was actually flipped. In the banking world, people used to browse online and then go and shop offline. Now, that's something that banks need to change. It is going to change. The last 6 months have shown the banks that they have been forced to operate in a manner wherein they have to look at fulfillment of customer needs online rather than just showing them the product online and then move on to an offline fulfillment mode. Now, this opens up a whole new world of possibilities. Okay, for better customer experience, better efficiencies and cost reduction, product services. Now, banks can either do it on their own or collaborate with fintech partners, leverage their nimbleness and innovativeness. Now, how does this impact the millennials and the Gen Z? The behavior that I just spoke about is more applicable and more displayed prominently by the millennials and the Gen Z customers. So they are the first set of customers who are most receptive to this change, and as such would be the early adopters. According to Dubai statistics published at the beginning of the year, 74% of the population of Dubai is under the age of 40. So you can imagine the huge impact that this has on this market. Currently, there exists a huge gap between the expectations of millennials and Gen Z and the availability and the ability of financial services industry to deliver. Now, COVID has forced the financial services industry to try and accelerate, like Arjun was saying, a lot has been talked about that, to accelerate things, digitize things, and deliver things faster. And obviously, they are also seeing the benefits of that. So in my opinion, in the initial phases, the financial services industry and the banks are just going to play catch up in terms of delivering the needs of the unfulfilled needs of the millennials and the Gen Z. And then as the new normal sets in, then new needs will arise. That's when the opportunity arises, and that's where the opportunity lies. So essentially, we're looking at opportunities that we don't even know about yet. It's going to be an exciting time. Over to you, Philippe.
Thank you very much, Kezar. Now, if we look at these trends, and I'm turning now to you, Venki, how did these trends impacted the business model and operating model of banks, but and financial institutions at large?
Picking up on the thread that Kaiser talked about, which is how the consumer behavior in the banking industry is changing, and the face-to-face is becoming less prominent, especially in the last 6 months. The same consumer is going less to a supermarket expecting deliveries. The same consumer is now flying less, and the same consumer's kids are now not having face-to-face school necessarily, and so on and so forth. So basically the same thing is happening to us. And as an industry, we have, across the last 10 years, invested fairly well on, if I may say, self-service between the app improvements and the say internet banking, where people could do transactions and information requirements on their own. But on the assisted side, it was still very face-to-face. And suddenly, in about 6 months, all of us have had to effectively learn from the schooling industry, who moved much faster than a lot of other industries, and overnight switched. And they run out of IT departments of 2 and 3 people, and they actually went from complete face-to-face to effectively what we call assisted. And I think different banking players have done the same. I can speak for our company. We had to basically accelerate a huge what we call remote sales capability, and essentially replicate a lot of what was face-to-face, which was anyway a trend that was happening face-to-face going away, but we had to really accelerate that a lot. And I think if I speak for the banking industry, a lot of people have invested quite recently on that. And in a way, it's a good balance, because you've always so focused on self-service that you were forced to go into this assisted methodology. And I think that's how the industry has evolved, especially so in the last 6 months.
Thank you very much, Venki. Now, obviously, this enormous growth in digital commerce has had a very deep impact on payments, and we've seen the emergence of payments of all kinds. If I were to turn to you, Shahbaz, how do you see this evolution in the future, and what new trends and impact it will have, do you think, on the market, and how does Visa plan to address it?
I think so. Look, I mean, Arjun has touched upon the fact that e-commerce behavior, contactless payment behavior in the UAE has really accelerated. It was already there before. COVID has just accelerated it in a big way. So just to give you an idea of the kind of momentum we've seen. So in the UAE today, 2 out of every 3 transactions that are conducted face-to-face are conducted contactless from a payment perspective, right? So 2 out of 3 customers are tapping out of their shopping wherever they are. There's a huge growth in e-commerce. We used to see stubborn pockets of cash, especially. So even you would have customers who would buy online and then would get the delivery and will pay cash on delivery. That used to be always a pet hate of mine, very, very sticky sort of cash behavior. We've seen that move. We have seen e-commerce merchants disabling cash on delivery as an option because of moving to the entire touchless way of doing business. So we've seen significant growth, and we wanted to understand from our consumers whether they see themselves, behaving this way after the fact, after the, COVID passes on and things get back to normal. And to our delight, essentially, so we found that nearly 45% of consumers said that they will continue to shop more online because they see the convenience, they see the apprehensions they had before have disappeared. We saw nearly 43% of consumers who believe that they are going to be using more contactless payments, and will continue to stick with that behavior. We've seen nearly 50% of consumers who are saying that when they shop online, they will continue to pay with card rather than cash on delivery. So these behaviors are here to stay. It's part of the new normal, and we'll all have to get used to it. And in Visa, the way we look at it is, so we're doing 3 or 4 things to evolve this going forward, right? So the first and foremost is we are trying to make the online shopping experience, the e-commerce experience, as seamless as possible. We don't want payment to be an event. We want it to be an enabler, right? So, as an industry, we've introduced an EMV standard way of checking out and paying. It's called Secure Remote Commerce. That's live. Card abandonment remains a major problem with e-commerce shopping. We're trying to get over that with this uniform checking out experience. So that's one way of enabling e-commerce and making it seamless. Another thing that we're really actively working on is acceptance infrastructure in the UAE and more broadly in the region has really scaled over the last few years. We want to make sure that it continues to do so. So we are investing a heavy amount of time and effort and investment into more economical forms of acceptance in terms of hardware and what acquirers can do in the marketplace. So things like soft POS, which is essentially your phone device, as it's become a payment device, should become an acceptance device as well. So that's something that we are really working on, because we believe that that's where where we'll be able to get some of the smaller merchants into the loop. When we're talking about such growth of online payments, the fraudsters have also kept up with that sort of trend. So we're investing quite heavily in security, right? So we want to make sure any payment, whether it's done online or face-to-face, is secure. So we're investing in things like 3D secure when it comes to online payments. We're investing in things like tokenization when it comes to face-to-face, so that we can support the growth of the wallets and make sure that whichever way you want to pay, you're safe and you're secure, and there is trust. And I think just to sort of underline all of this, the way we want to support the evolution of this is we are investing quite heavily in merchant education and consumer adoption. So there have been a lot of times, so at the peak of the lockdown, where e-commerce was the only way for people to get their sustenance, we had a lot of e-commerce retailers where we drove campaigns for first-time e-com users to be able to put their card on file. So we ran campaigns, consumer campaigns, offering them discounts to do so that they get over the initial hurdle of trusting an e-commerce payment. Similarly, we run merchant education all the time. We want to make sure that they follow all of the safety protocols when they are accepting payments. And this has really helped us sort of scale. And this is how we believe that the ecosystem is going to evolve going forward.
If I were now to turn to fintech, which has obviously been powering this transformation, lots of talk about the role of fintech, the rise of fintech. Namir, what are the sectors within fintech that you see will have the most impact in the region, will play a broader role going forward in payments and e-commerce? Do you expect, for instance, foreign market participants to enter more aggressively? What should be the response of our local GCC base? What are the major observations and trends you can underscore for us?
So basically, a couple of things that have been happening lately, I must say. So when we're talking about the international fintechs looking at the region, that has seriously picked up in the past 3 months, I would say. Reason why I'm saying this, why it has picked up in the past 3 months, at this point of time, you have fintechs coming in from the European part of the world, you have Far Eastern fintechs as well, at the same time North American fintechs too, who have been aggressively tapping on not just on the bank level, but also they're taking the approach of directly reaching out to the regulators. Because a lot of fintechs who are serious in the game and serious in the business have understood the fact that some of the limitations that we have in the region are basically focused on the regulations, right? So some of them are taking that approach. However, in terms of the regional play, I mean, I must say, looking at the ecosystem closely, in the past, let's say 3 years, there has been a shift in terms of the quality of fintechs that have been emerging out from the region. And that has a lot to do with the inflow of talent coming in from different countries, at the same time talent maturing in terms of building the right fintechs locally and regionally itself as well, because there's more awareness coming in from larger players too, and of course openness on the banks as well, that is basically encouraging the fintechs to have serious conversations with these key stakeholders. In terms of the verticals that I would say that we have, that have evidently grown, I mean, Arjun has been, let's say, instrumental in, let's say, enabling BNPL, right? So, I mean, let's talk about that. So on the retail side, BNPL is seriously picked up. However, I see that there are other emerging verticals too, but if you look into a couple of them that have been really standing out, I would say one is certainly BNPL, and second is on the lines of open banking. Now, when we're speaking of open banking, why it's basically, I mean, working right now closely with the regulators since I've been engaged in that, and larger stakeholders that we have. On the open banking front, the regulators have been seriously looking into the space of how we can implement the functionalities, at the same time, how we can implement other key, initiatives that talks about regional onboarding, which maybe, it's not as easy as it sounds, as you would know, but those conversations that have only enabled many open banking players that I personally know of, not just from the region, but outside the region as well, to basically work in collaboration with the regulators for this. So, I mean, in a nutshell, this is how I would see the space really picking up, and more to do with, I mean, one of the things that I would say also would be the fact that as the space is opening up, the regulators, so there are two types of conversations that are currently happening. Like I said, some fintechs are reaching out to the corporates directly from outside the region, and some fintechs have started having direct conversations with the regulators to ensure that go-to-market becomes quite easy. So this is what I have been seeing so far in the past 3 months. Yeah, thank you.
Thank you very much, Namir. Shahbaz, what's Visa's views on fintech? What are your observations?
We believe that fintechs are something that have now become very central to the global payment ecosystem, right? So I think there are very large players that are looking to enter the market. We have, a while ago opened up our network, and we want to participate, and we want to collaborate. And I think that's the way we've been going about it. There have been significant things that we've done within the region to be a part of the scene. So, we're part of the DIFC FinTech. In fact, one of the founding members of the DIFC FinTech Hive. We've been part of the accelerators in Dubai. We have an innovation center in Dubai where we collaborate with fintechs. I think where we see a lot of interest, especially fintechs entering into the region, to sort of add to what Namir said before, is a lot of fintechs look, remittance players looking at obviously UAE being a huge outbound remittance market. BNPL we talked about. I think there is a lot of opportunity for fintechs to enter into, as we look into more and more digital banking and digital onboarding. I think there is a lot of value where fintechs focusing on those sort of areas, looking at the region, the way we want to work. I mean, we want to collaborate with fintechs. We have been doing so globally. We have recently introduced in the region what we call a fintech fast track program. So traditionally, fintechs obviously are on a limited budget. We are used to working with larger financial institutions. So we were being seen as a little bit difficult when it came to working with fintechs. We've streamlined our approach. We've streamlined a lot of that just to make sure that they see us as a valuable and a willing partner. An recent example of a collaboration we've done in the market is, I'm sure you must have read that we've signed a landmark deal with Careem, where we signed across 13 markets with them. So we're really open for business. We want to collaborate with the fintechs. We think that they add a lot of value into the global payment ecosystem.
Thank you very much, Shahbaz. I'd like to now switch gears and turn to super apps. As we all have seen in China, the rise of super apps and gaining traction in Southeast Asia. The question is, do we see this coming to the region? Arjun, what are your views, and do you think it'd be possible to see a super app coming to the region, or will it be more like in the West, where it hasn't really seen, except perhaps for Amazon, if you consider that as a super app? What are your views?
It's a hard question, right? It's a hard one because when I look at our business and look at all our partnerships in Southeast Asia, there is a crazy amount of activity going on with either you call them super apps or apps within apps. But if I just take a first principles approach to the UAE or some of the markets out here. So while I'm not saying it'll come or not, I think there are certain fundamentals in the UAE which lend very well to a multifunctional app or a super app, as we call it. So we have a small and a homogeneous audience, right? It's digitally very savvy. And obviously the mobile penetration is arguably the highest in the world. There is an ability and an increasing willingness to connect the ecosystem, because of the arrivals of fintechs and the banks realizing that they need to differentiate, right? And I think there are certain problems which are here, which are compelling enough to solve, right? So those are sort of the building blocks, I believe, that exist. Now, if you take that a little bit further and sort of say, how does that play out here? I think every super app, which I've at least seen succeeding, whether it's WeChat, Alipay, Grab, Gojek, or even if you look at Russia, a brand called Tinkoff, they actually all have a very solid core offering. So I don't think you can just go out there and launch an app without a solid core backbone. I think there needs to be a solid core offering, and then you build out from there. I think sufficient playbooks already exist, so we don't need to reinvent the wheel entirely. I think there's a lot of learning. I know it's more eastward than westward, but I think there are certain things from the West we can learn. There are some pretenders which are in the market already. I think there are 3 or 4. Obviously, Careem has a stated intent to turn into a super app. FAB has launched something called Pay It, which it claims will evolve into a super app. We have an Etisalat partnership with DIB on something called e-wallet, and obviously Majid Al Futtaim has launched something called Share. Now, all of them have sort of the building blocks of what might actually say. The only point of caution I'll actually add to this is that this market is not one where multiple super apps can coexist, right? It's just not big enough. So I think the winner will take most. I don't think the winner is coming out in the next 6 months either, right? And the other thing is that I do think there'll have to be some form of a consortia at the core. So what I mean is that unlike, let's say Grab, for example, which was Grab at its core and then built a whole series of relationships around it, I think here you might need more than one partner in the middle. And that could be a bank with a service provider or so on and so forth. But personally, I think there is a potential for something like this in the market. Whether it replicates what exists in the East entirely or not, I think time will tell.
Super apps is a natural segue into innovation, and we've seen payment as really being a wonderful example of how innovation has changed the business model in the payment world. Shahbaz, now, if I were to look at the different conglomerates that have emerged, multi-brands, multi-business lines, etc., trying to breathe innovation in a fairly complex go-to-market model, what are your observations of the opportunities, and who has seized that well?
Yeah, so I think I think the payments ecosystem has gone through so much disruption and innovation over the past few years that, and I think there are learnings across the board, right? There have been certain sectors and conglomerates that have been forced to innovate. You can see that obviously consumer habits have changed dramatically, and I think nobody saw that coming. I mean, Venki alluded to the fact that the education sector obviously has gone through tremendous change overnight. Arjun will testify to the fact that the retail sector is going through a similar kind of change. I think consumer preferences have clearly shifted online, right? And they will stay there. I think once you're used to a good experience, you never go back. So what we find is consumers are willing to make choices based on the, from a payment perspective, payment options available to them and the kinds of, buy now, pay later kind of options available to them. So there is this necessity to innovate within the marketplace. I think what we see is a lot of the conglomerates, and one of the things where payment innovation sort of helps a lot of these businesses, and something that has not been, in my view, harnessed yet in the marketplace is a whole lot of data, right? So the payments that happen within a business generate a whole bunch of data, especially when they happen digitally or electronically. I haven't seen a lot of that being harnessed to its maximum potential. I have seen attempts at doing so, I think Alpha Time Group is as good as it gets in this marketplace in terms of harnessing that kind of data and trying to personalize offerings across their multiple brands and multiple businesses, right? And I think that's the power, because the payment footprint that a consumer creates over a period of time. There is a huge potential to personalize and customize offerings and drive business across these conglomerate and multiple brands. And I think that's where I feel, that's, if I was to sort of point to one thing that I would think the conglomerates could learn from is just that. How do you personalize your offering, knowing all of the data that the consumer creates as they transact with and interact with your brands across the multiple business lines that you have, right? And I think that would be my assertion.
Thank you, Shahbaz. What would be the banking sector response to it? Venki, what are your views on innovation and how banks have responded to these transformational changes?
Yeah, I mean, it's a bit to Shahbaz's point. The consumer is the same consumer. He goes and buys a loaf of bread at a supermarket, and he also walks into the bank and opens an account. But we both have the data, but we necessarily haven't put it together. So I think by necessity, all of us will have to start at some stage pooling data with effectively our existing partners, and that will create new opportunities as well as service our mutual customers better. And there's a different aspect to it, which is innovation is not just happening in the payments industry or the banking industry or financial services. A lot of players are investing in, especially on the digital ecosystem. So in this part of the world, you have your auto dealers, for example, who are now shrinking their auto dealerships, and a lot of it is going where you can actually see your car online and do a lot there. They're investing a lot on that. If you go to our home providers, they're doing similar stuff, and these are existing providers of the dominant banks. So we are having to now effectively co-innovate at the same time, because you have to both keep in pace to deliver to the customer what is essentially a joint offering, where, for example, like in Adib, we are both a significant player in the auto finance, vehicle finance industry, as well as in the home finance industry. So our partners are doing stuff which is innovating / digitizing, and we have to be in the same step with them. So suddenly, the respective digital labs have become very active places, and I can only see that trend increasing as time goes ahead, both in the UAE and the region.
So sorry to interject. So just to Venki's point, right? I mean, I think so we have an innovation center here in Dubai, and in fact, we've probably seen more non-financial institutions, businesses like Alpha Time and some of our other merchant partners come in and talk about how we can innovate with them and collaborate with them than some of the financial institutions, right? So I think that sort of just gives you an indication of how conglomerates are thinking about innovating.
Thank you both. ADCB has been very active in the field as well, and in innovation. Kazar, what are some of the highlights that you could share with us?
So I think the relationship between retailers and the financial services industry is more symbiotic rather than just a simple integration. I think the innovation is driven by some underlying drivers, which are probably more important to understand and acknowledge before we try and understand what the impact it has on the wider financial services world. Now, if you look at purely from the retailer's perspective, what's going on around in the world, the e-com trade is actually driving down margins. The pressure is on top line growth, and coupled with the fact that the millennials and the Gen Z customers are looking for more flexible, more transparent, and cheaper borrowing options. What does this do? It just presents an opportunity for new models and new players to seamlessly integrate themselves into the POS lending ecosystem and offer a solution. Now, that's only one way of looking at it. This is also leading to not just a sale, but also improving shopping cart conversion. It is also improving overall shopping experience. Players like Klarna, Affirm, a lot has been said about BNL, Afterpay. They have successfully integrated and entrenched themselves into this ecosystem and caused a phenomenal amount of disruption that was probably unseen a couple of years back. If you look at companies like Bread Finance in the US, they have integrated themselves into the merchant website directly. So at the time of checkout, you can either see a nominal price or you can see a monthly finance price on which you can check out. Now that's the level of integration that we are talking about and the disruption that we are talking about in the industry. This not just increases the shopping cart conversion for partners of Bread, but it also increases the basket size substantially. So it's actually working for both parties. And of course, then there are the traditional installment payment plans offered on credit cards, etc. Now, that's only on the consumer side. That's the opportunity on the consumer side. There's a phenomenal opportunity on the merchant side that exists as well. So we are also in the merchant acquiring business. So if you look back in time, the only access that merchants had to finance was probably a straightforward merchant cash advance or a loan, a tenured loan. But today, with the rich data that acquiring banks have, that we have, we can work on with merchants on working capital finance against future cash flows. We know when the finance is coming in, the cash flow is coming in, and what is the quantum of that finance that's coming in. So that presents another business opportunity. Now that's the traditional merchant acquiring partners. In this country, we've already seen these BNPL players who are very consumer centric, who already entered the market. Some of them that Arjun alluded to at the beginning of the conversation. But then there's another entire domain that's untapped in this market, which is non-traditional financial players, fintech players, financing merchants. They are sitting on a whole lot of data that is social, non-social, traditional, non-traditional, and they have algorithms, they have AI. They can do amazing things with finance, and they can make lending decisions for merchants, which probably banks cannot do. Now, this again, coupled with the quantum and the timing of the cash flow, presents a huge opportunity for non-traditional financiers. This is, I guess, just the tip of the iceberg. With open banking coming in, this area will keep on getting more and more exciting. There will be new alliances formed between financial services partner and retailers. And I think it's a win-win for all. Even the customer wins, in my opinion, at the end of the day.
Thank you, Kazar. And indeed, it's a natural segue into open banking. We've mentioned it a couple of times as being one of the major disruptive trends. What are your observations, Kazar, in terms of the open banking trend in the region? Is it really supported by the different regulators in GCC, or is it more like the North American model where it's market-led? What do you see the role of the regulators versus the aspiration of banks as opportunities and threats?
So historically, the financial institutions have been the custodians and the sole providers of financial services. The open banking is going to change all that. It's actually going to level the playing field and give equal opportunities to incumbents as well as new third-party service providers to compete through authorized access of consumer data. And within this entire play, the clear winner is going to be the consumer. In the Middle East, we haven't seen much traction on this front. Naveen can probably pitch in later, but Bahrain has already seen some OB regulation that's come out already. There's a gateway, I think Taraboot, if I've pronounced it correctly. Taraboot is already the licensed OB systems provider in Bahrain that is integrated with about 11 financial services provider. NBB is the leading provider over there. They've actually rolled out their first app that is integrated. It's kind of an aggregator that has brought together 7 banks, and it's kind of a super app where they actually present to you data of 7 banks, and they have big plans on that as well. Now, if you look at UAE locally, in UAE, we don't have CB regulation yet. There is no regulation on open banking as yet, but ADGM has set out regulatory guidelines, and they've also established a fintech digital lab. I think there are other players as well, like Shehbaz was mentioning. They have established a digital lab, and also we have the first financial technology accelerator that was established in the region in the IFC. Now, overall, if you look at the 4 key players in the OB ecosystem, you have the financial institution, the regulator, the third-party service provider, and the consumer. Now, despite its growth potential that we are looking at, there are concerns. There are concerns in this ecosystem. It's very nascent. There are concerns around data privacy. There are concerns about data retention, standards, authentication, how will you authenticate customers, security, fraud, liability, disputes, and so on and so forth. So there is a clear opportunity where probably there could be some kind of a division of labor, if I may call it that, where the industry focuses on innovation, use cases, operating models, and obviously how to monetize this entire animal called open banking. And the regulator has another crucial role to play to establish rules, licensing, a unified API approach, data privacy laws, and most importantly amongst all of this is to protect the consumer. So in my opinion, there is no clear shortcut. There is no one way where either it's led by the industry or by the regulator. It has to be done in tandem. There has to be a partnership with the regulator. I think that's the best recipe for success. The regulators in UAE have always been ahead of the curve with a very consultative approach we've seen in many, many fronts. And I see no reason why this can't work on this domain as well. Open banking is just the beginning, if I may call it that. Open banking will lead to open finance, and then eventually it will lead to an open data system. So just the beginning.
Thank you.
Over to you,
Thank
Philippe.
you very much, Kaizar. Now, Venki, if I were to look at this open banking, and let's take a positive view of the opportunity that Kaizar you highlighted, what would be the area of focus? Where would the greatest opportunity you see in this open banking transformation?
I think, like Kaizar alluded to it, there are 2 aspects to it. One is it's nascent here in our region. Second is how this will evolve is probably neither going to be exclusively the UK Europe model, regulator-led, or the North America model. It will probably be customized in our region by, if I may say, organic growth, which means that the regulators will consult with players. There'll be fintechs who will come in and give ideas. Some of these concerns that were talked about will actually become risks. People will react to those risks. So I think it's really it's really the beginning, as was mentioned, and I think it's an evolving trend. I don't think any one of us can actually look ahead and say 2 years from now this is how open banking will look. This is genuinely one where you can't put a box on it, and there'll be some things which we haven't yet thought about, which will come and which might be very specific to the region. So we have seen in the last 5 years in different industries aggregation happen, and aggregation leading to certain benefits for the consumer. I think the same would happen in open banking, where aggregation between 2 unlikely partners will lead to something which is a naturally better product. Some of it will be on the fringes of regulation. As a result, regulators will regulate it again. So it will evolve in a step tandem, and probably 5 years from now, I would be able to truly answer your question. So today it's a crystal ball, and I've got a couple of crystal balls on that which I've kind of put out, but I think that's probably the real answer on this one.
Thank you very much, Becky. Now, as part of this transformation, there is unfortunately some fallout, and we cannot avoid talking about SME banking and how the sector has suffered disproportionately from this COVID crisis. Turning to you, Kaizar, how has ADCB responded to this situation? How can you actually help the SME enterprises cope with this crisis? And what are some of the lessons learned?
Absolutely, Philippe. SMEs are the backbone of any economy, and their recovery is as imperative for the overall economy as much as any other segment. The government of UAE has taken a series of measures to help out the SME segment, right from introducing various types of new categories of licenses to ease of setting up the process and the financial benefits accrued to the SMEs. Now, in tandem, I think the financial services industry also has reciprocated. As ADCB, this is something that is very close to our heart. It's a very key segment of our proposition and in our bank. To relieve the stress that these SME segment was feeling during this COVID-19 period, we have done a series of things. So first and foremost, we have reduced the minimum balance requirement across the board on their accounts, because typically, if the balance is not maintained, there are certain fees that are levied to the customers. Then, in line with the test program that was rolled out by the central bank, we have also offered them deferrals on their borrowing relationship. That has been a huge relief for most of our clients. In addition to that, a lot of these SMEs also have card acceptance. So we have unilaterally, from our side, reduced the merchant acceptance fees by 50%, although the interchange that we pay out to the issuers remains exactly the same. So as a relief measure, we did that for, I think, about 6 odd months. We've also reduced monthly fees for clients who are on subscription packages, almost 50% across the board that was reduced. Now, in addition to these financial incentives, we also have to think a little bit long term. How can we support the SMEs, not just financially during this crisis period, but as a long term as well? Now, if you look at what UAE government is doing, they are offering the businesses, there are different types of businesses, some kind of relief in terms of the licenses that are granted to them. So there are some licenses like the Tajer, the e-trader license, the instant license, the freelancers license. These companies do not need a physical premise. They can be, just issued a trade license up to a maximum of 3 years. And in the interim period, they can establish their business and then go for physical premises. Now, this is a no-no in the banking world. Typically, in the past, these customers could not open an account. So we have worked on a dirham-only account, which takes away the need for customers to be flagged as high risk. And majority of these companies are doing trade within the country. So we've offered them a very simple, straightforward, no-frills dirham-only account that just takes care of their banking needs. WPS is one key requirement for most of these clients. So we offer them WPS, we offer them online banking that takes away the need to visit the branches through self-service mode, which is quite common, if I may call it that, for consumer banking, but not so common for SMEs in this part of the world. So as a package, there's a lot being done by the bank. The learning is that if you have a really good proposition out there in the market for your customers that genuinely takes care of them, then customers reciprocate as well.
Thank you very much, Kaizar. Venki, how does ADIB, which is very committed to this segment, has responded to the challenge?
Sure. So, I mean, ADIB is very strongly committed in this particular space because this is kind of the backbone of this economy, and is true in the region, but certainly in the UAE. And clearly, the SME industry has had a very tough time of this COVID era. So ADIB has been extremely accommodative and worked with them. We've been a dominant player with the test program, worked with the regulators on that, and essentially effectively managed each of these clients very carefully. A lot of them are very long relationships of the bank. So, you have to stick by your client by thick or thin, and this is the time when you have to demonstrate that commitment. And I think ADIB has been very committed to the segment and to specific customers and their needs. And I think in the medium term, we have seen, because the SME industry has had these cycles in the past, this commitment pays off on the relationship side, both for the bank and the SME, multifold in times to come. So we've basically been very committed to the program, followed the test guidelines, done anything that was possible that would help the customers at this particular point in time, especially the ones that were most distressed, because some parts of the SME industry in particular really felt the brunt of it when suddenly overnight their customers vanished. So, and we also know that these are strong players and they are people who are committed to their own businesses. So if you stand by them now, they will stand up and grow and play. And we've seen this in this industry has at least 3 cycles in the last 15 years. That's Adeep's commitment to this segment, and these are things that we've done. I think the medium term, what we will land up doing is, as we build out our digital capabilities, etc., the SME industry probably doesn't have necessarily the ability to build digital labs in each of these SMEs, but we could leverage some of our capabilities by bringing them in and doing something like what Visa has done with us on their Innovation Center. We basically do that for the SME industry. So these are, if I may say, the immediate last 3-4 months strategy, and then what we will be doing going forward.
Since you have the floor, I see the opportunity to basically address with you an important and growing part of the banking sector in the region, which is obviously Islamic banking. Do you observe similar trends? Are there some specific dimensions to Islamic banking which you see will be driving the evolution of that market segment?
Yeah, I mean, there are 4 or 5 trends which one can discern at this point of time in this particular space. One is the fact that because there is just increased adoption, the segment by itself is growing. What that leads to is certain patterns, and one of them is the fact that as a result, there are more players entering the space. So you're seeing essentially the market is evolving to, if I may say, purely Islamic banks and banks who have an Islamic offering. So we call it an Islamic window. So clearly there are more windows appearing because the segment is growing, which is very natural because there's a commercial opportunity, and you'll find players who want to utilize that opportunity as the segment grows. And I'm now talking not just the UAE, but probably in the region. The second aspect of that is, as a result of that, the governance framework around Sharia compliant banking is also becoming much more mature. And this is across the region. But if I use the UAE example, the central bank has established the higher Sharia authority in the UAE, and we are now getting resolutions from them, which is helping mature the whole industry, because there are areas which are now getting clarified and fructified and so on and so forth. So that's the second trend, which is apart. So you have more players, you have this increased governance. And the 2 other interesting aspects that are coming here is, this is not directly payments related, but in the affluent space, there's probably a bit of a catch-up happening in this industry. So the wealth management sophistication on Islamic banking is actually going leapfold at this point of time. Probably the industry started with basic financing products, basic liability products, and now it's coming up the scale, as say the conventional bank industry would have done at some point of time. And the last, which is probably the most fascinating part of this, is that there is the growth of a sub-segment, which is effectively, as you build digital products, you have the Islamic digital products. And I can proudly say that Adeep is clearly one of the pioneers in that space. Our digital lab is essentially an Islamic lab for Islamic product lab, and we bring out a lot of those products, and that will keep evolving. And why this is relevant is, a lot of people are doing similar stuff, but in the Islamic industry, there's a need for transactions to have certain flows, certain time stamping, and the digital capability is bringing that out. And second is, sometimes those would have certain nuances which you can digitize much faster. So now what's happening is the customer experience you can give on the Islamic product is growing tremendously, and it just provides a fascinating experience. And for each of the experiences that Adeep has put out like this, we can clearly see the business growth that comes out of that. So it's very clear that if you, in the Islamic banking space, specialize on digitizing and increasing the customer service, the segment growth that's anyway coming will come a lot more towards you. So these are the 4 trends that I see in this space, and clearly these will get enhanced as the years go by.
Thank you very much, Venki. Kezar, from your perspective, what are your observations? Do you echo? Do you have certain initiatives that you would like to highlight?
I would resonate what Venki was saying. Islamic banking system has rapidly grown over the years, not just in UAE, but globally, primarily because of the basic tenets of transparency, its strong moral and ethical framework, and it is more customer friendly. So people have seen that, and it is therefore no wonder that even within our base, and Venki, correct me if I'm wrong, but we see a sizable number of our customer base who are not of the Islamic faith, but they still choose Islamic banking because of the basic principles of Islamic banking. It has got nothing to do with the faith that they practice. In UAE, 33% of the individual deposits are Islamic, and almost about 25% of overall lending is Islamic. So there is obviously much more room to grow. As a bank, as ADCB Group, we are what Venki alluded to was a window. So we are a window-based Islamic bank. And if you take probably our other group company, Al Hilal Bank as well, we both put together are probably bigger than some full-fledged Islamic banks. So there is tremendous potential in this domain. Now, if you're looking at the regulatory framework, which again Venki talked about, is it's getting strengthened further. One of the key things that was probably not there in the Islamic banking domain earlier was standardization. It was probably left to individual Sharia boards in terms of that decision making. Something that would probably be allowed by one Sharia board would not be allowed by another Sharia board. So there was some arbitrage, if I may call it that, between banks. With the establishment of the higher Sharia authority, there is more standardization. And there are a series of initiatives and regulations that have been published in the recent past, which are actually going to work brilliantly towards bringing the stability in the industry. And most importantly, it will bring about consumer protection, which is what the customers are looking for. As far as the growth is concerned, Islamic banking in the region will continue to grow. But as far as growth globally is concerned and regionally is concerned, we have a long way to catch up with the conventional banks. There are other big markets where there is opportunity. For example, India is one big market. North America, Europe, there is a big opportunity in Islamic banking there. So customers who are from those geographies, when they are in the UAE, they prefer Islamic banking, but they do not relate it back home. They do not see that back home. So unless and until Islamic banking grows globally, we will not be able to compete with conventional banking at par. We will probably be playing the catch-up game. But then again, there is phenomenal room for growth. At almost 30% market share in banking, we still have 70% more to capture from conventional banks.
Thank you, Kazar. Extremely interesting. Stepping back a bit, one common theme that was mentioned throughout is innovation, and we cannot dissociate innovation with fintech. That has been a really integral part of this changing landscape. If I were to turn to you, Namir, looking at the fintech space in the region, be it UAE or GCC or even more broadly, what are the elements that you think are impeding this pace of transformation? What are the 2 or 3 suggestions you will make in order to facilitate this growth and continue to attract in the region the right fintech, innovation, capital, ecosystem, as we, in a way, compete with other parts of the world, such as Southeast Asia, and Singapore is a leading center, as we know. So what would be your observation?
My observation is as simple as regulations. Once regulations are, there are many other observations, but it eventually boils down to what are you permitted to do and what is not permitted to do. So regulation is the piece that will certainly solve a lot of, I must say, things that have been causing or raising impediments for fintechs to basically be a part of the larger game. Once this is resolved, things are going to be different. What's happening on this space, I personally feel, so this is linked. So how this is linked, if you're looking into the VCs injecting capital into any region, they definitely see the viability of a project into the region itself. So, while having multiple conversations with with investors, this has been a major impediment when it comes to regulations. However, what's basically happening on the regulatory space, which I personally feel will certainly bring in more players into the region, is coming up with frameworks, more and more frameworks. I do see a lot of consultation currently happening right now on open banking as well. We have, of course, there's tremendous talk happening on the EMI and the PSP framework as well. That's going on right now. So these are those critical steps that have been taken. And in terms of the regulators responding to, I would say quite up to date frameworks and regulations. It is taking its sweet time, but certainly the environment is getting conducive. I can only share for the fact right now, I know there's a lot of work happening personally, but I can only share for the fact that there are new regimes that are being currently aggressively worked on by the regulators itself, and that does target and that does focus on a couple of things, such as EMI, PSPs, and most importantly, open banking. I believe that once these two are basically catered onto, they will certainly open up the space furthermore when it comes to fintechs coming into the region. And I mean, as MFT has been a fintech association, I mean, that's exactly what we do, is that, bringing in, having these multiple and key larger players. We have unicorn players, we have larger scheme players as well, who collaboratively, all of us are basically working on the frameworks closely with almost 16 to 17 central banks at present, and to ensure that we get the point across, and we also at the same time get the regulations influenced.
Thank you very much, Namir. Well, our time is up, and really on behalf of all my colleagues here at Arthur D. Little, I would like to thank all of you for really interesting, engaging conversation. One of more conversations we will have on the topic. So, of course, feel free to send us your questions. We'll address them individually. But again, a big thank you to all of you, and I wish you an excellent rest of the day. Thank you very much for joining this online conference.
Thank you very much.